Good morning. Thank you for joining today's daily webinar where we discuss your questions and go over specific topics. Today's topic is the self-employed 401k, know your options. We'll be live again here at 1 p.m. Pacific time here on this St. Patrick's Day. We'll be also doing daily webinars all week, twice a day. Once at 10 a.m. Pacific time and a second time at 1 p.m. Pacific time. Please like our YouTube channel and subscribe for more videos like this. We're going to be providing educational material today. We're not going to be providing any financial advice or tax advice on today's daily webinar. All right, before we get started, let's look at a few questions here. And as always, you are welcome to shoot over your questions here on the live chat. Like we've got a question here from James about a professional association tax as an S Corp. Solo 401k reporting at Schwab, reporting voluntary after-tax contributions. I know that reporting is optional on W-2. Does the contribution require reporting on a personal income tax return? Great question. It does get reported on that Schedule 1 of that Form 1040. Actually, it's going to be Form 1040, not the Schedule 1. It gets reported when we issue the Form 1099-R to the government with a copy to you to file with your personal tax return. So on that Form 1099-R is used to report the conversion of the funds. On that same Form 1099-R, the voluntary after-tax contribution is also reported. And then you also report it on your Form 1040. Let me see if I can pull up the line number. And we actually provide the information as to where to report it on your 1040 when we email you the Form 1099 download link. That's the Form 1099-R. Give me a moment here, if I can locate some information. So you're going to be reporting it on line 5A of your Form 1040 and then line 5B. Line 5A is where you list the gross amount converted from the voluntary after-tax bucket. And 5B, the taxable amount, that's where you report, that's where you list the earnings that are accrued in that voluntary after-tax solo 401k bucket before it was converted to the Roth solo 401k or the Roth IRA. Okay, let's see if we have any other questions here. Looks like you have a follow-up question. I made an excess contribution to the 401k for 2024. Is it possible to carry over the contribution onto 2025? What are the options for correcting excess contributions? So let me send you a link to the excess contribution rules, because it's going to depend on whether you made an excess employee contribution versus an excess employer contribution. The rules are different. The way it works is that if you make an excess employer contribution, so in your case, if we're talking about an S corporation, it would be that 25% profit sharing contribution. That excess amount has to stay in the plan, and then you can use it towards the annual contribution limits in future years on the employer side. Now, if you make it as an employee contribution, those rules are different in that you have to remove those employee contributions plus the earnings from that solo 401k account, and you need to do so by April 15. So for example, if you made an excess contribution in tax year 2024 to the solo 401k as an employee contribution, you would need to remove it plus the earnings by April 15 of this year. But that's only if it's an employee contribution. If it's an employer, it's got to stay in the plan, as I mentioned earlier. I'm going to share that link with you so you can read up on it more. With respect to removing those excess employee contributions, you would need to actually work with your CPA and reporting the removal of the excess contribution as well as the earnings. And that's outlined in this link I just sent to you. So take a look at that. It's got great information. All right, let's see here. Looks like we have another question here. What funds can be rolled over to after-tax bucket in my solo 401k plan? Well, keep in mind that the self-directed solo 401k plan allows for various sources in the plan. So you have to have a separate bucket for each source. Let me see if I can share a screen here. That talks more about that. So keep in mind, if we're talking about a one participant solo 401k plan, the plan is sponsored by the self-employed business, so one plan. The plan allows for three different source types: pre-tax contributions, whether employee or employer; Roth solo 401k contributions, whether employee or employer; and voluntary after-tax solo 401k contributions. As far as transferring funds to the solo 401k plan from an IRA or a former employer plan, you can transfer Roth 401k funds from a former employer plan. That would get transferred to the Roth solo 401k bucket. It can also be a former employer plan, such as a 403b, thrift savings plan, or even a 457b plan. With respect to IRAs, you can only transfer pre-tax IRA funds to the solo 401k, and that would go to the pre-tax solo 401k bucket. So if you have a Roth IRA, you're stuck. The Roth IRA regulations do not allow for the transfer of a Roth IRA to a Roth 401k, including a Roth solo 401k. Same for after-tax IRA funds. After-tax IRA funds are funds that accumulate in what's called a non-deductible IRA, which is part of the Backdoor Roth IRA, where you make a non-deductible IRA. There might be some earnings on that non-deductible IRA. You can transfer the earnings, because those are pre-tax funds, in that non-deductible IRA to the pre-tax solo 401k bucket, but you cannot transfer the after-tax IRA funds to the solo 401k. So in sum, you can never transfer a Roth IRA or the gains in a non-deductible IRA to a solo 401k. Or I should say the basis, I should say. So you can never transfer the basis in a non-deductible IRA to a solo 401k, but you can transfer the gains in that non-deductible IRA to the pre-tax solo 401k. Okay. We got a question here, another question. We'll go over this last question and then we'll start talking about the self-employed 401k, your options. You need to know your options, and then we'll come back and answer some more questions. This question reads, I am planning to submit for an SBA loan for a real estate investment. Can I use a check from my solo 401k account to make a deposit for the loan? Well, you can't use your solo 401k funds for an SBA loan. That's a prohibited transaction. Nor can the solo 401k get an SBA loan. Now, if you've got the business financing 401k, also known as a rollover startup 401k, that's a whole different type of plan that allows for investing in your own business. But if we're talking about a solo 401k plan, it would be prohibited to get an SBA loan for a solo 401k. Now, you can borrow from the solo 401k plan through a participant loan, and we're going to talk about that here when we start talking about the self-employed 401k and knowing your options. So with that being said, let's start talking about the self-employed 401k and what your options are. So obviously, in order to open up a self-employed 401k, also known as a solo 401k or individual 401k, you need to be self-employed. Because a solo 401k plan, aka self-employed 401k, just as the words imply, is for someone who's self-employed. More specifically, it's for owner-only businesses, which means you cannot employ any full-time non-owner W-2 employees in your business. A full-time W-2 employee is anyone who works 1,000 hours or more in your business who is not an owner in the business. Of course, there is an exception with regards to the spouse. So if you're married and your spouse wants to participate in the plan, he or she does not have to be an owner in the business, but he or she is going to have to be working in the business in order to participate in the plan. So here's an example of a two-participant plan where both spouses are self-employed in the same business, let's say an LLC or an S corporation. So the plan would be set up for the business. Both spouses would work in the same business, so each of them would have separate holding accounts under that solo 401k plan to hold their respective funds and sources. Let me share another screen with you here. But we just talked about the eligibility requirements for a self-employed 401k. Now we're going to talk about the different features here. Let's see here. Pull up those slides here. All right, so when we're talking about a self-employed 401k, it's typically referred to as an individual 401k, or it can be referred to as a solo 401k or a solo K, single K. Bottom line, there's different terminology to refer to a self-employed 401k. But at the end of the day, from an eligibility perspective, it's a self-employed 401k plan for owner-only businesses that do not employ any non-owner common law full-time W-2 employees. Now, a self-employed 401k, when we're talking in the context of an individual 401k, is typically one offered by a brokerage firm or a bank institution, and it's a watered down type of self-employed 401k. Watered down meaning that it's very basic in that it only allows for pre-tax contributions or maybe Roth employee solo 401k contributions, but it doesn't allow you to self-direct it into alternative investments like real estate, such as precious metals, cryptocurrency, promissory notes, tax liens, real estate syndicates. It typically only allows you to invest in equities. Again, that's the self-employed 401k, also known as an individual 401k, typically in the industry. It also generally does not allow you to take a loan from the 401k, known as a 401k participant loan, nor does it allow for checkbook control, wire control, which is important when you're looking to make an alternative investment like physical real estate or a promissory note or a real estate syndicate. So that's why it's important to understand your options when we're talking about a self-employed 401k. So typically a self-employed 401k in the context of a solo 401k is one that's got all the bells and whistles. For instance, it allows you to serve as the trustee of the plan. It allows you to invest in alternative investments, such as the ones we just talked about, whether it's real estate, promissory notes, cryptocurrency, um, even equities. You can even trade options, futures. It also allows for checkbook wire control, meaning you can place investments by writing a check or you can do it by wire. It allows you to take a loan from the plan, known as a 401k participant loan, where you can borrow 50% of your solo 401k balance, not to exceed 50,000. So, for example, let's say you have a solo 401k plan with a market value of $200,000 and you want to take a 401k participant loan. You can borrow 50% of that 200,000 up to 50,000. So you wouldn't be able to borrow 100,000. The maximum would be 50,000. Likewise, another example, if the balance of your solo 401k plan is 50,000, the maximum you could borrow would be 50% of that 50,000, so 25,000 is the maximum. You could also invest in life insurance through a solo 401k plan. From a contribution perspective, it's good to know your self-employed 401k options. Let me share some contribution information with you. What the, where's that screen at here? Okay, here, the slides here, if I can bring them up here. So with the self-directed 401k plan, from a contribution perspective, you can make both employer Roth solo 401k contributions as well as employee Roth solo 401k contributions. Not all self-employed 401k plans allow for both of those types of Roth contributions. Some do, like Schwab has a solo 401k that allows for Roth employee contributions, but it does not allow for Roth employer contributions. Another big feature of the self-directed solo 401k from a self-employed 401k option perspective is the voluntary after-tax solo 401k contributions as part of the mega backdoor Roth option. That's where you can make your entire overall contribution limit for the year to the voluntary after-tax solo 401k bucket. So this bucket right here, the voluntary after-tax bucket, and then you can immediately convert it to the Roth solo 401k or a Roth IRA. For example, for tax year 2025, the overall contribution limit is $70,000 for a self-employed 401k. Well, with the solo 401k plan, once that's self-directed, you can make that entire overall contribution of $70,000 to the voluntary after-tax solo 401k bucket and then convert it to the Roth IRA or the Roth solo 401k. In the industry, that's dubbed as the mega backdoor Roth strategy. So that's a great and very important option that is available for a self-employed 401k, specifically a self-directed solo 401k, not an individual 401k, which is again typically referred to as a watered down solo 401k offered by banks like Chase, Wells Fargo, and typical brokerage firms like Fidelity or Schwab, to name a few. You also have the ability to get the auto contribution credit for having a self-directed solo 401k. That's another great option that a self-employed individual needs to be aware of when they're looking at a self-employed 401k. This auto contribution feature is not offered by all 401k plans. Again, the watered down plans offered by a company like Schwab, Wells Fargo, Fidelity, Chase Bank, Vanguard, well, they don't offer solo 401ks anymore, but T. Rowe Price, Ascensus, those don't come with the auto contribution feature, which is a $1,500 credit that you receive on the business side for opening a solo 401k plan. Essentially, the government is subsidizing your solo 401k expenses for many years. They want you to save for retirement, especially with the retirement crisis going on in this nation, with Social Security probably set to run out here over the next 10 years. Now, a lot of the savings is being shifted to individuals through defined contribution plans, like a solo 401k plan. Well, this $1,500 auto contribution credit, it's a dollar for dollar tax credit equal to $500 per year for a maximum of $1,500 over 3 years. You have to have a self-employed 401k plan from a self-directed solo 401k provider such as my solo 401k financial, whose plan documents allow for it and who has the necessary amendments to allow for that auto contribution credit. One great thing about this auto contribution credit is that you're not required to contribute to the solo 401k plan in order to qualify for it. What is more, when the plan is open for new plans, we automatically include this auto contribution credit. This auto contribution credit wasn't available till the end of 2023. Therefore, if you're an existing client, you can actually restate your plan with us, or you can have us update your plan for this auto contribution credit, and you can qualify for it immediately starting with the 2025 tax year and spread it out over 3 years in $500 increments. So those are some great features about the self-employed 401k and things you need to know. Now, keep in mind that it's not too late to open a self-employed 401k plan for tax year 2024. There's still plenty of time, especially if you're trying to make voluntary after-tax solo 401k contributions as part of the mega backdoor. You have until your business tax return due date plus timely filed extension here in 2025 to open a solo 401k plan so that you can make contributions for 2024, specifically voluntary after-tax contributions, as well as employer contributions. The employee contribution, that one is not too late either to do it for 2024 if you open a solo 401k plan here in 2025, provided your business is taxed as a sole proprietorship. So that's a very important clarification there. This is a great resource from our website that talks about the solo 401k setup deadline for 2024. It breaks it down for each entity type. Well, let me share that with you. And then let's take a look at some more questions here on the live chat. So take a look at that there. I'm also going to share a great article that we wrote, and it's appearing on the, let me pull up that site here. Give me one moment here. Let me pull up, it's regarding the auto contribution credit. It appeared on the White Coat Investor. It's a blog post that we posted on there. I'm going to share that with you. There, I just sent it to you. It's a great resource to look at because it talks about the auto contribution credit versus the tax credit. The solo 401k qualifies for the auto contribution credit, that $1,500 credit we just talked about. And you're going to use Form 8881 to claim that $500 credit each year. So you would file it each year for 3 consecutive years. So you can get a $500 credit each year. So this article here has that this post that I just sent the link to has great information because there are a lot of CPAs out there that are not aware about the auto contribution credit, or they may be confusing the what's called the tax credit versus the auto contribution credit. So take a look at that. It's a great resource. We put that together a few months ago. All right, let's see if we have some more questions here. Looks like James is back here with another question. Excess contributions S Corp with solo 401k at Schwab. They were both employee contributions and employer contributions. How do I decide whether the excess contributions are employer or employer? Well, you're going to need to decide by first understanding that for 2024, the overall contribution limit is $69,000. So you need to decide which one you over contributed or which one you want to treat the excess contribution from. So it would probably make more sense to do it from the employer side. Why? Because as I discussed earlier, and as discussed in that link I shared with you earlier, let me pull that up again here. This link here. It'll probably be best to try to remove it from the employer profit sharing side, because those can stay in the plan and they can be treated as employer contributions in future years. So you make sure you don't take a deduction on your tax return for 2024 on the employer side for that excess amount, but instead you would leave it in there and then take it as a deduction that's an employer contribution for 2025. And when you're going to make employer contributions for tax year 2025, make sure you understand that there are some excess contributions on the employer side that you're treating for 2025, so that you don't run into an excess contribution by over contributing for 2025. Okay, let's take a look at some more questions here. We got a question from Raj. My wife and I work at a hospital and get 1099s. Do we open two accounts or just one account? We are trying to open an account right now. Great question. So if you are both self-employed in a separate business, which appears to be the case, if you're both contractors and you each receive a separate 1099 NEC, that means that you are not self-employed in the same business. You would be considered self-employed in the same business, for example, if you both work in an LLC and you guys are both employees under the LLC and you take a salary through the LLC. When you're a sole proprietor, a contractor, that doesn't work because you're receiving 1099 in your name. Therefore, you each would need to open a separate solo 401k plan. So it would be two separate plans, one for you and one for your spouse. So it would not be one plan. Great question. And with you, since you're a sole proprietorship, as I touched on earlier, you still have time to contribute to the solo 401k plan for tax year 2024. Even if you open the solo 401k plan here in 2025, here on St. Patrick's Day or later. Why? Because with the sole proprietorship, it's even better. You have until April 15, or if you file your personal Form 1040 extension, you're going to have until October 15 to make all solo 401k contribution types for tax year 2024. So you're going to be able to make employee solo 401k contributions, Roth solo 401k contributions, and voluntary after-tax solo 401k contributions. Take a look at the link I shared earlier. Let me see if I can pull that back up here again. I'll send you the one specific for a sole proprietorship, aka a contractor who receives a 1099 NEC. Here, let me share that with you. So as you can see, we have great resources on our website. You can search all these resources by going to the top right-hand corner of our website and typing in the keywords. So there's that link there. And you would also qualify for that auto contribution credit. Okay, let's see what other questions we have here. Well, I think we may have come to the end of our questions for today, and therefore the end of our presentation where we discussed the self-employed 401k and knowing your options. We'll be back here again at 1 p.m. Pacific time, and until then, have a great St. Patrick's Day.